In a March 13, 2018 Farm Doc Daily article, we examined farm balance sheets from 1996 through 2016. From 2006 through 2012, we saw strengthening in farm balance sheets. Working capital increased, net worth increased, and the debt-to-asset ratio declined. Since 2013, we've seen erosion. Working capital has declined, net worth has stabilized and declined slightly, and debt-to-asset position has begun to rise. At the end of 2016, though, on average, Illinois farms had a very strong financial position. On a per-acre basis, Illinois farms enrolled in FBFM had $4,850 of total assets, and of that $4,850 of total assets, 21%, or $1,035, were in liabilities. 79% of those total assets still were in net worth. During the 1996 through 2016 time period, a great deal of change happened to working capital. From 1996 through 2006, the current ratio averaged just a little over 1.6. Current ratio is a measure of working capital, and it equals current assets divided by current liabilities. From 2006 through 2012, when incomes were relatively high, working capital increased, reaching a high of just over 3.0 by 2012. Since 2012, incomes have been lower and working capital has declined. Total assets also increased from 2006 through 12. Several factors contributed to this increase, including gains in working capital, increases in machinery values due to increased machinery purchases, and increases in land prices contribute to the rise. Since 2014, total assets has declined moderately. This, combined with still modest increases in total liabilities, have led to declines in net worth over recent years. This figure shows the stability and then declines in net worth in 2015 and 2016. In recent years, the debt-to-asset ratio has also begun to rise after a declining period from 2006 through 2012. Those increases still lead to very low levels of the debt-to-asset ratio, but the increases in the debt-to-asset ratio are a worrisome trend. This historical look suggests a strong but deteriorating position or financial position on Illinois grain farms. We do see working capital eroding, actually at a fairly rapid rate. However, our equity and debt-to-asset positions remain strong, but they are weakening. This look back has looked at averages across many farms, and those farms come from Illinois FBFM data, Farm Business Farm Management data. It's important to note that these are averages, and some farms face more difficulty than are depicted by these averages. Those farms that rent a high proportion of their farmland will face more difficulties, as well as younger farmers. More detail on financial trends can be found in the March 14th Farm Doc Daily article.